Anyway, folks, it looks like we are live here at Pro Trader Strategies. My name's Eric Wilkinson. Let me try and clean up some of this. It doesn't look like Facebook went live, though. Not really sure why. But anyway, we have it live on YouTube, so some of you folks can take advantage of this. And keep in mind that if you are on Facebook and not on YouTube, at YouTube, you need to hit that subscribe button, and there's a little bell there that will give you a notification when I come on live. So make sure that that little bell is also notified as well, or clicked, whatever you want to say. And smash that like button throughout this video. If you find something that actually lights up that bell inside your head or turns on that light bulb, make sure you hit that like button, because that feeds a bot that will then go out and find somebody just like you to share that information with. So make sure you guys are smashing that like button for me. And throughout this video, comment over at the side. If you see something you want me to look at, I'll throw it up here if you comment over on the side during this live video. Otherwise, I will circle back around, folks, and make sure you are all clear of concept. All right, so without further ado, usually what I'm going to do is start out with the economic data, see how that's impacting the markets, and then talk about the trade that I just put on. I might jump to the trade here relatively quickly because it has to do with crude oil here. Not a whole lot of economic data here in the United States. Across the pond, we didn't really get a whole lot there either. Great Britain had a couple of their Fed governors speaking. Here in the United States, we got a couple of economic data points. Remember, yesterday we talked about the economic data starting to slow down from the manufacturing sector. It's continuing to show up. We got industrial production yesterday, negative 1.3%. It was expected to be a positive 0.3, so a huge miss on that number. They also had capacity utilization coming off just a little bit as well, 75.2, expected to be 76.6. And revisions to both last month's number down a couple of tenths of a percent. So those numbers not looking so good. Remember, yesterday I jumped on here a little bit early to talk about my trades. Well, I did the same thing again today. We do have economic data to talk about here, though. Building permits, something to note, building permits, we can pull as many permits as we want, but it doesn't necessarily mean that we are actually building on those permits. So we don't really look at that number. We want to see how the starts actually shape up. And here we got the housing starts coming in at 1,560,000. That was about 50,000 less than what was expected. And we got a revised number down about 40,000 on that previous number. So we missed almost by 100,000 housing starts here. A lot of this headwinds is due to the higher cost of manufacturing and those inputs that are going into that manufacturing sector there. So let's talk about the markets. We've got crude oil coming off just a little bit. Something to note here I want to talk about is this little area at the top. It's looking like we are seeing some weakness here. I don't know if we're going to pop or drop. A lot of folks calling for $100 a barrel, but I'm seeing the manufacturing sector weakness, and that is going to be a major lack of demand coming from crude oil. Therefore, the pop or drop scenario is in full swing right now, and we talk about that in the webinars that I do on Thursdays. So make sure, again, you guys are subscribing and hitting that bell so that you guys know when I come on for these videos. Sometimes they're unannounced, and sometimes they are scheduled, like those webinars where I really drill down on different option components. So make sure you guys are subscribing, hitting that bell next to it, because the bell actually lets you know when I come on and announced. All right. So this is looking a little toppy, but are we going to pop or drop? My risk assessment here is to the downside. If you were looking at something for a real directional analysis, I don't know that we're going to necessarily sell off. That's why I've got that pop or drop scenario, but I would lean towards the downside as downside risk there. Bonds, I really don't think we're going to go anywhere, folks. Yeah, they're going to try and price in a little bit of higher interest rates, but at the end of the day, we've got a lot of Fed governors speaking today. They probably will start talking a little bit more hawkish, meaning worried about inflation, but we still haven't met anywhere close to the employment mandate that these folks are looking for. So that I think that that's going to really struggle to keep interest rates or allow interest rates to start creeping higher. Gold is starting to move, and that is going to be an inflationary gauge. But now Bitcoin, I was completely expecting Ether to be making these incremental moves over what Bitcoin's seeing, but we can see Bitcoin near the all-time highs here, trading in the 60 handle here, 60,000 again here in Bitcoin. I was thinking Ether would at least get to 20,000 before we would resume seeing Bitcoin at 60,000, but here we are. All right, VIX is off a little bit today. Not really a whole lot to see here in the tea leaves of the equities. We can see NASDAQ is pushing a little bit higher. Something to note, it's going to need to get above, let's just call it 15,400-ish in order to break this pattern where we have lower highs and lower lows. That's indicative of a bearish pattern, folks. And we are right now at that area where it rolls over. That is a lower low. Now, something to note with the Dow Jones Industrial Average, and we're kind of starting to see a little bit of this in the E-mini S&Ps. It's obviously going to be the end of the day settlement here for these folks, but we can see we're up against this 150 Fibonacci extension. And I've talked about this time and time again. At the top of a pattern, these things are very difficult, especially inside of a move. So we are pretty much inside of a move. So this pattern where we have two counter opposing dojis right up against one another usually is going to signal a continuation of that momentum. But sometimes we do see these roll over. So when you see these two candlesticks lining up, it's really a no-go type of scenario for a directional move, because it really is telling you we could go in either direction at any given time. Again, E-mini S&Ps, a settlement near these highs would lead us to believe that that pattern has been broken. No confirmation. It is going to continue to rally, but a settlement near the lows today, that's going to make one of those continuation patterns where we just don't know whether the market is going to pop or drop. All right. So keep your eyes out for that. E-mini S&P is not really a whole lot. Weakness is really on the economic data, but keep in mind right now, the market is really kind of trying to balance whether or not the raising of interest rates is going to be good for the market or bad for the market. Most likely the equities are going to have a bit of a tantrum if we start to talk about raising interest rates, right? That's in a good economy. If we don't have a good economy, folks, and the market is starting to slow, or the economy is starting to slow, like we're seeing in these manufacturing numbers here and in China, which is even more alarming, to be honest. Those types of scenarios are what gets folks to buy equities, because they think that the interest rates are going to remain relatively low for the foreseeable future. And that is an opportunity to buy equities. All right. So when we're seeing this bad economic data start to turn here right now in the near future, I would say that is almost bullish for equities, as that would make the investor think we're not going to raise interest rates there. All right, kind of go Philbus. I want to talk about this. I was mentioning with the pop or drop scenario in the crude oil. Now, I'm doing a webinar on Thursday about the strangle, the long strangle for that matter. And when we're talking about that, we're going to really dig into the pricing of the options and determining whether or not those are cheap or expensive. So if that's something you guys want to participate in, make sure you are subscribing and hitting that bell so that you get a notification when I pop in unannounced. Now, yes, those videos on Thursdays are scheduled, but to get you a notification, make sure you guys have that bell indicator lit up there. So really low implied volatility. I don't know if this is going to pop. If we get oil going to 100, we're going to see this market really push to the upside. But if we drop, we're going to see this market really start to correct back down to these levels and to the point of control, or at least the value area high, which is lining up with that 50-day simple moving average. So the pop or drop, I don't know. I am leaning towards the downside, so I do want to capture that. I went in and did the strangle in this particular underlying using further duration options, right? Because I want to limit that theta decay in those options. So I went out to the January and I bought the 70 puts and the 80 calls. And that's right when we're trading around 75. So equal distance away for that strangle. And I'm going to talk about how I pick those strike locations, because we have a guideline for you folks out there to follow in order to pick the right strikes, the ones that are going to be the most optimal there. And I paid a debit of $5.41 for that. Looking for a big move to happen. Now, the beauty in this, we can see that we got really low volatility, but going into earnings, we usually see volatility start to expand. So that would help this strategy, even if we got stuck in the mud right here at this level. So I could get volatility expanding. That would help my premiums because those premiums would start inflating right away. So I'm going to keep an eye on this. If we don't get volatility expanding going into this earnings, then I might just ride this out as a very cheap play for an earnings call. All right. So keep your eyes posted on the videos because I will keep you up to date, win, lose, or draw on all of my option strategies, when I'm putting them on, why I'm putting them on, and when, where, and why I'm taking those off as well. All right. That's all I got for you guys. Other than make sure, again, you guys are subscribing, smash that like button, feed those bots, and comment. I will circle back around here, folks, and make sure everybody is clear of concept. If you want me to comment on something, throw it over there. I'll be reading your guys' comments over there on the side. All right, that's it. That's all I got. If you can't take that, take it easy.